if I can be heard clearly, or if there is adjustments that I can make from my side before we start the webinar. All right. Okay. Thank you so much. I can see that I'm being heard clearly. Welcome everyone to our webinar today. It is a privilege to have you guys join this webinar, and I'll be stepping in for Dr. Regina today as we look at KRA audit triggers. Basically, we'll be looking at some of the mistakes that we as business owners, we as tax practitioners, we as auditors make that basically gives KRA an invitation to have a deep look at our books. And I don't know if I may ask, how many of us have received a letter of verification for the 2025 returns, especially the non-items? In the recent past, KRA has embarked on the verification part of the 2025 returns. And what they are basically focusing on the non-items invoices that we claimed. And also apart from that, zile items invoices that we claim, kuna verification that they had been used for business. So if you're running, for example, a consultancy firm, na items zako zilikuwa zimejaa vitu za hardware mingi, so KRA will definitely call you and ask you, hatukatai unajenga nchi, lakini hatujengi nchi na simiti kama wewe ni consultant. So it is more of a verification process. So have your records ready, have your receipts ready, have your proof of payments ready, because it's not a matter of if they are going to verify, but provided ulikuwa na items receipts, be very sure that you'll receive a letter for verification. And basically our webinar today will be on how to handle such kind of reviews, the do's and don'ts, the kind of triggers that would have triggered KRA to have a deeper look into your accounts. Yeah, and basically ways of compliance as far as tax audits are concerned. So we shall look at the types of KRA audits. We shall look at how the audit landscape has changed in the modern times. We shall look at some of the triggers that actually trigger these tax audits. We shall also look at the stages of the tax audit, like the procedure on how the things flow, and also best practices prior and during the tax audits. Yeah, I hope by the end of the webinar, we shall be well conversant with the procedure of tax audits and also how we can handle these tax audits to avoid additional assessments, to avoid penalties and interest from KRA. So, a tax audit is most of the time like a surprise visit from in-laws. Yes, you may be innocent, but then again you suddenly to start wondering whether the house is clean enough. Yeah, no one looks forward to the in-laws visiting. So you might be innocent or not, but you will start doubting yourself. So what is a tax audit? A tax audit is an examination of your returns by KRA, basically to verify that the incomes and the deductions that have been declared are accurate. So it is more of a review of your returns where KRA looks at what you have filed in the iTax system, and then they ask you for the documentation. Mostly, they'll ask you for the audited books, they'll ask you for your bank statements, they'll ask you for your ledgers, they'll ask you for your TBs. Basically, what the source documents that built the audited books, which ideally was used to feed the iTax system, they want those choice of documents just for a verification, because in Kenya we are in the self-assessment regime. So after you've assessed yourself, there is a verification. So usually the purpose is to ensure that there is accuracy in your returns. Also to detect errors during filing. For those businesses, some individuals who are dealing with fraud, who file fraudulent returns, the evaded tax. It is also one of the purposes, and also most of the time it promotes a voluntary compliance, because even you as a business, you can request KRA to do an audit on your accounts just to ensure that you are 100% compliant. So yeah, there are some voluntary audits where businesses actually ask KRA to come and have a review of their books. So in this age of automation, KRA audits is no longer random. Most cases, if not all, they are mostly triggered by a lot of system discrepancies, a lot of non-reconciliation in your returns. So finding how automated systems and common compliance pitfalls expose Kenyan businesses to very costly tax audits. So if you fall into these compliance pitfalls, the tax audits might be very costly to your businesses, especially automated platforms like the iTax and eTIMS. As much as they do not detect human error, they flag numerical variances. If there is a variance between your iTax returns and the eTIMS returns, they will definitely flag that. And most of the time, you'll find that if these variances go unresolved, it is basically a flagging risk to your PIN. So we have to be very careful when we're actually filing. Ensure that the eTIMS, the iTax, they go concurrently. Also ensure that what you're filed, if you're registered for VAT, what you're filed on your VAT returns and what you're filing for your annual returns, there's no mismatch. Failure to which, that is usually most of the time an automatic. It is usually an automatic trigger for KRA. So as we continue doing our returns, as we continue in our day-to-day running of our businesses, it is very important to note and also to realize that there are some practices that we might be doing in businesses that actually expose us to KRA. Most of the time we're told that you cannot outwit the system, that the system is smarter than you. In most cases, if not all, you'll find that to be true. You might think that you're smarter than the system, but when it comes to KRA audits, if you're not careful, you'll end up paying a lot of hefty fines. So you have to be very careful on how you are doing your returns to avoid unnecessary triggers for KRA. And we shall be looking at those triggers. And I hope by the end of this session, we shall at least learn one or two things, and we shall be able to identify the things that we're doing that actually invite KRA. So what types of tax audits are there? We have 4 types of tax audits. We have self-correction notice. This is whereby KRA flags data errors on iTax and eTIMS and asks you to fix them. For example, for those of us who have not actually filed for 2025 returns, you will find that KRA will send you a notice it will basically be telling you that you have filed your VAT returns, let's say, have been 10 million last year, but your annual returns are 0. So they'll give you a time duration to actually amend your returns to mirror what is in the system. That is usually the first step that they do if there are data errors, or if there is a mismatch between, let's say, your ETIMs and your iTax, or your withholding taxes, they'll basically ask you to rectify them yourself. And number 2, we have a desk audit, whereby KRA will review a specific type of tax. It might be a different specific type of tax. They may tell you they're dealing with withholding, let's say VAT. Let's say they can tell you it is MRI if you're a landlord, or they will even tell you that we are reviewing your custom entries if you are either an importer or an exporter. It might be a specific kind of tax. But as much as the law tells us that once an audit period has been audited, it cannot be audited again. If, let's say, for example, you had been reviewed on VAT alone, KRA can also come again and review the same period, but it might say that now we want to review your pay, we want to review your income tax, we want to review your withholding taxes. So those are sometimes it's specific kind of tax, or they can decide to compile all the taxes, but they will elaborate in the audit letter on the kind of taxes that they will be looking at. Also, sometimes it's a single invoice issue. Sometimes KRA would want to verify the authenticity of invoices that have been claimed, whether in your VAT returns you claimed it as an expense in your income tax. They'll ask you for the receipt, they'll ask you for the delivery notes, they'll ask you for the proof of payment. So mostly utapata they might select a sample of your invoices and ask you to provide the existence for them. So it is up to you, the burden is up to you to actually ensure that you have the supporting documents. If it is the LPU, ensure you have it. If it is the delivery note, ensure you have it. If it's the proof of payment, ensure that you have it. We were looking at a case whereby KRA was querying about how a certain purchase is related to a business of someone. And one thing that actually saved that client was he dealt in general items. So in his returns kulikuwa na hardware items, in his returns kulikuwa na even seeds. So they were asking, so which kind of business, why are you claiming input ya hadi mbegu na za hadi hardware materials? So what actually saved the client, he had even sales receipts for the seeds, whereby he showed that he procured the seeds, alikuwa na delivery notes, alikuwa na LPOs, alikuwa na invoices, alikuwa na the proof of payment. And besides that, there was actually evidence that whatever was purchased was sold. So ensure that there is a trace of your receipts to avoid issues with KRA. And also when you want to claim refunds, either VAT refunds or any kind of refunds, KRA will do a desk audit for you to ensure that whatever you have declared is okay, and also the refunds are authentic. The refunds that you want it refunded. This is usually mostly the case for exporters. We all know that, or rather, exports according to law they are zero rated. So if you incurred VAT on your inputs and you exported the items, then you are eligible for a refund of the VAT that you paid when you are purchasing the inputs. So before they give you a refund, they will ask for a desk audit, whereby they just want to verify your returns and verify the authenticity of the inputs so that you can be given your refunds. Oh, and yes, KRA gives refunds, and they give them wholesomely if you can be able to prove there were actual input that were used for business. And then number three, we have field audits. Field audits is where this is usually more intensive, where KRA will come and even visit your premises. They will visit your premises, they will look at your operations, and this most of the time it is a full review of all types of cases. So when it comes to a field audit, KRA looks into every type of tax that you are eligible for. They will look at VAT, they will look at income tax, they will look at withholding taxes, they look at pay as you earn, they will look at every tax depending on the kind of field that you are. So the field audit is usually more extensive. And lastly, we have got investigative audits. This is usually, it is more of forensic. And most of the time it is done when there is suspicion of tax evasion. And when it comes to investigative audits, as much as the law says audits can be done for 5 years, but when it comes to the forensic, as far as tax evasion is concerned, KRA has got no limit. They can go back 10, 15, 20 years when it comes to investigative audits. This is usually every business's nightmare, but it's only exclusive for people who are being suspected of tax evasion. So in all cases, if not all cases, an ignored automated notice turns into a desk review, which triggers a full KRA audit. So, okay, if you assume the self-correction notice, they will now do a desk audit. Then from a desk audit, it can even mutate into a field audit. So to avoid all this, ensure that you counter these audits in their very first instances to avoid escalation, which is usually more intense, and it will leave you with a lot of assessments. So let's ensure that we try and basically avoid that. So what is the operational reality? What are the automated risk signals? Number one, we have accuracy over speed. Filing on time with incorrect data triggers an immediate audit alert. So as much as we might want to do things in speed, let's ensure that there is accuracy. Number two, data mismatch triggers audit. Sometimes there are simple errors. Let's say simple errors between ATM's invoice and iTax returns. But as far as this mismatch is concerned, even for those of us who are filing 2025 returns, you could not declare income which were less than your ATM's returns. So KRA is actually trying to bridge that gap by ensuring that the taxpayer does not declare returns which are actually less than what is in the ATM system. In 2024, 2020, especially in 2024, it was actually possible, whereby you'll find someone who has ATM sales. Now, at the end of the year, may declare either a lower return, even nil returns. But in such circumstances, KRA actually asked you to review your returns to reflect the actual values. Those who fail to do that, it is escalated into full reviews and audits. And so we have refund claims. For those of us who, as I've said, who want refunds, basically it will have to trigger a system audit. Tax refunds always, before they start reimbursing you at the very start, they will have to audit your business. And also we have continuous system monitoring. your business can be audited multiple times if system variances remain unsolved. The fact that you audited this year does not mean that you're not going to be audited next year. If the same variances appear next year, you're going to be audited again. If it appears the following year, you'll find that you're going to be audited each and every time. So the earlier we actually resolve these variances, the less chances of being consistently audited by KRA. Because for those of us who have been through a KRA audit, basically your business almost comes into a standstill because it's very, very intensive. So to avoid such kind of disruptions frequently, and let us ensure that we resolve these system variances that keep on attracting our KRA. And also we've got third party data tracking. So basically what happens, currently KRA is tracking your custom entries. Is also KRA has access to, let's say, third-party information such as the NTSA. KRA has got access to your land records. KRA has got access to your meter numbers in KPLC. So these third-party sources can actually be one of the triggers that will actually make KRA come for an audit. So we have got different kinds of audits. We have the VAT audits, we have the pay audits, and lastly, we look at the income tax audits. For VAT audits, one of the major triggers, usually when inakuwa turnover per annual VAT returns, differs from turnover per annual audited accounts. If there is a variance between what you have declared in your VAT returns on a monthly basis with what you have declared as your income tax at the end of the year, as your revenue in your income tax returns, then it will be a trigger for an audit. Number two, if you've got VAT refunds claims, if you want to claim refunds of VAT, then basically you'll have to undergo an audit. Also, if there is a consistent failure either to remit your VAT returns, consistent failure, or rather consistently filing VAT returns, consistently filing nil returns, consistently being in a credit position. These are usually some of the red flags that will make KRA very curious on your returns, and they will ask for a VAT audit. So number one, let's ensure that we file our returns on time. Let us ensure that the input claims, the input claims by if you are doing a lot of purchases and you're not claiming them even in your returns, KRA will become curious because they will ask you why are you having purchases and you're not claiming them, which basically means from their version that you are declaring your sales. So it will be an audit trigger. And let us also ensure that we continue filing, maintaining a proper VAT control account, and also nil VAT returns consistently. KRA will be curious. But it can be able to verify, especially for those of us who are in the contractual business, whereby, yeah, you're registered for VAT, but there are some periods where there is no business going on, there are no transactions. You're actually allowed to file the nil returns, but sometimes KRA will ask you to come and explain. Provided you can prove that with the help of your bank records, then you're good to go. For those of us who are filing consistently VAT credit position, we are in a credit position, year in, year out, you're claiming credits. KRA will be curious, kwani if it is accumulating of purchases, when are you starting to sell? And number two, where are you getting the money to buy those purchases if you're not making sales? Then number three, they will compare your credit position and also your stocks. You're claiming you're buying things, but your stock is not increasing. So they'll be curious those purchases zinaenda wapi ama zinatoka wapi. So let us ensure that we look at these triggers and actually ensure that we curb any kind of pitfalls that might occur from these triggers. And also sometimes there are some industry-wide tax audits. Sometimes KRA might just decide to, for this period, we are auditing contractors. For these periods, we are dealing with manufacturers for this period. So if you fall into the industry which is being audited, basically you're going to be audited, even when there are no triggers. So the best way out, always be prepared, because you never know how KRA will decide to actually do the criteria or selection of those people who are going to be audited. And then we have pay audits. So you are registered for pay, but you're not remitting pay. Ama you have registered for pay, but consistently you're remitting it late. Ama you have registered for pay, but you're filing new returns, like there are no employees. Or rather, there's a very significant fluctuation. This month, your total payroll amount was 500,000. Next month, in a look at 1 million. The other month, in a look at 300,000. KRA will be curious about that inconsistency. And also, sometimes when the director has got a high standard of living, KRA when ni director, KRA wanakuita meeting, unaenda unapark kwa parking yao, unapark V8, lakini kwa declaration ya salaries wamesema unalipwa 30,000 ama 50,000. It doesn't make sense. So these are some of the triggers that actually triggers pay audits. And so most of the time you'll find one of the triggers that actually is a major one, when there is a variance between the salaries account in the annual returns and the pay returns. If there is a variance, that is a trigger. The salary figures that you're claiming at the end of the year should be the same as pay, unless kuna wages which we will have to verify, which we will have to confirm that they actually existed. So ensure that the amount that you're claiming for salaries and wages is the same amount that has been accumulated in the pay returns. Failure to which, of course, it will be an audit trigger. When it comes to income tax, when there is a failure to separate sources of taxable income, if let's say you have different sources of income, uko na rentals, uko na rental income, uko na business, uko na consultancy, and then in your infinite wisdom, you consolidate all the incomes, and then unaweka zote under business. Of course, KRA will be curious, and they would that will be a common trigger. If there's a variance between, I have talked about variances between the annual VAT returns and the audited accounts. Kama kuna variance between the two, of course, that will trigger KRA to look into your books. And then there are some businesses. Ulianza biashara 2018 hadi 2025. Kila mwaka you're running a loss. You are running a loss. Why are you still in that business? KRA will be curious. And hii biashara yako, there are some industries, especially those which are capital intensive. In the first few years, it takes longer to break even. But wewe umekaa 10 years na every year una claim uko na loss. Of course, KRA will be curious, because they'll ask you, why are you doing this business if it is actually making consistent losses? And also, which is very important, if your tax auditors, or rather your tax service providers, have a bad reputation as far as the returns are concerned, because KRA, at the end of the audited accounts, Huwa if for those of us tukiangalia the audited books, kuna kwaga na stamp ya, of course, the auditor. So when KRA realizes that there is a specific tax auditor whose returns ziko na shida from other taxpayers, then they're going to be flagged. So the moment the moment they know that it is that tax auditor who did your returns, of course they will want to audit your books because they know that there are mistakes that have been made over there. So it's very important. Most of the time, cheap is expensive. So kama uliamua ni mtu wa cyber kufanyia, ama your cousin who ameenda shule ako na BCom, ama it is just some shady auditors whom you have found somewhere, it is going to come and cost you. Also, sometimes it is information from other audits. When information from other audits flags your account, basically it will of course trigger a tax audit. Sometimes it is whistleblowing, either your accountant or a disgruntled employee who knows the operation, or a disgruntled auditor, which is very unethical. Whistleblowing, then KRA will come for you. So there are many triggers for these audits, and the more we know about them, the more we become prepared for them. I don't know how the chat box is. Probably I can look at one or two questions. I can answer one or two queries. Please let us engage in the chat box. I have I have a very able co-host who is going to answer your questions, and some of the questions I'm going to answer them. Eliza is asking how we get the resource. A recording of the webinar, you're going to receive it at the end of the webinar. We have a sheet where you can sign up and give your email so that it is going to be sent to your emails. Yeah, so you're going to get the resources in your emails. And let me see if I can look at any of these questions as we continue. So the question Edwin is asking, what happens where the director is not on the payroll of his or her business? So if the director is employed somewhere else, then it's totally okay if he's not in the payroll of the business. Or if he's being paid, you can include him as a secondary employee. But it is not a crime that the director has to be in the payroll, provided it can be proved that he's earning somewhere else and his returns. Because the issue with KRA will be the director is not in the payroll, but at the same time, the director is contributing to the business. How is that? So anatoa hiyo pesa. And what is even worse, you will find that there are some circumstances whereby the director anafile nil returns, but inaonyesha ali-inject 2 million kwa biashara. How KRA will be curious, hiyo pesa ilitoka wapi? Hiyo pesa ilitoka wapi? So it is actually very important to know that it is not a must for the director to be the payroll if they have a different source of income, but if they do not have a source of income, who anasema the first employee of a company is the director. So let us ensure that we comply with that. Let me look at another question. Someone is saying that we were exempted from VAT obligation in 2021 and in 2021. In 2025, the obligation was cancelled. And now, let me go back there. Was cancelled, and now VAT penalty of hundreds of thousands. How do we go about that? If you can prove that during the period in questions you had been exempted from VAT, then it is an appeal that can be done. And if you need more help, you can reach out to us. We will be more than able to help you maneuver through that. It is actually something that can be done. So you can just register in the link that has been provided. We will be more than able to help you do that. It's actually, if you had the exemption, VAT exemption letter, and you based that on your returns, then it is a case that can be actually be appealed against, or rather objected against. And then yeah, we will help you. Zaitun, reach out to us. We'll be more than ready to help you. Gilo is asking, what happens in a case where a client is employed and has a side hustle that is buying and supplying of hardware materials to a few clients? The PIN is one with the pay obligation, but the same has been used to register a business name to help in the side hustle. How do you help the client register for VAT with the same PIN as it's been used in the business name, which clients have already have? Okay, so if the person amefikisha threshold ya VAT, then they can register for VAT as individuals, which is totally okay. And having a pay obligation does not stop you from actually doing business. What usually happens when you're filing your annual returns, the return form, there is a section where we'll ask you if you have got any other business apart, any other source of income apart from employment. When you say yes, then it's going to open up additional pages where you will enter the data for your business. So kama uko na biashara kando na uko na employment, you can still declare your business income when you are declaring your pay income, employment income at the end of the year. Whereby what will happen, they will take your business income, they will take your employment income, or rather they'll take your profit from your business, and then wachukua employment income yako, and then they aggregate, and then what deduct the pay that you've paid during the year, and then you're going to pay the net on the profit in itakuwa imebaki. So it is totally possible, but ensure that before you register for VAT, umefikisha threshold. Yeah, the threshold for VAT is 5 million. So also, because you have said that the sales are not much, so if they're not much, if they're below 5 million, then you just declare the income, unatoa the expenses, and then the profit itakuwa imebaki hapo, that is the tax you're going to pay. Even if you have got a business name which is registered under your individual PIN, it's still the same. You're going to declare the returns the same in the same sheet where you're going to declare your employment returns. So let us look at the triggers, as I'll go back to the questions in a few minutes. The trigger for e-TIMS and ITAX sales, KRA has really tried to curb this gap, whereby in a jaribu, as I've explained, especially in the 2025 returns, there was no way you could, number one, declare incomes that are below your e-TIMS sales. Number two, you could not declare incomes that are below your withholding taxes returns, or the gross sales from your withholdings. So initially, ilikuwa kama uko na e-TIMS, ungefile to any amount of income tax, But currently KRA they are trying to bring them all together, whereby they will look at sales as per items, they will look at sales as per withholding certificates, and they are going to compare the two. And also they look at sales as per the VAT. So whichever is higher, that is what they are going to go for. You can't declare an amount less than that. So it is this kind of mismatch KRA is trying to make. KRA is trying to curb actually this that trigger. So it is moving forward from 2025. It's not going to be really an issue. Also, we have a trigger whereby businesses are claiming expenses or input tax credits using invoices from suppliers who are not ITIMS registered. As when I began, I asked how many of us wamepata barua ya verification. Wangapi wamepata barua ya verification ya 2025 returns. And what the basis for that return ilikuwa, the basis ya hiyo return walikuwa na sasa nataka kujua the non-ITIMS receipts that you claim that you incurred. We want now to see them. So kama ulikuwa uliweka hapo fictitious in the returns, tulikuwa tunajaza vitu mbili. Number 1, tulikuwa tunajaza CSV. Number 2, tulikuwa tunaattach the receipts. So and most of the time, because of the bulkiness, we did not attach all the receipts. Because the limit was 10 MB, and some of the receipts ziko mingi sana. So what happens, currently now what they're doing, they're taking your manual CSV, which ilikuwa na total expenses that you claimed, and now the individual invoices zenye zinaapia hapo ndani wanataka upatiane those invoices na upatiane how they were paid. So to avoid all this, we do not know about 2026 because KRA said that the validation process only applies for 2025 returns. For 2026, walikuwa nasema anything that is not in ITIMS is not going to be declared. It's not going to be accepted. It's not going to be allowed. Whether they will change their stance on that or not is still subject to confirmation. Whether they are going to ease up, kama venye walifanya 2025, it is still subject to confirmation. But that is not a risk that would want us to take, because you never know. They may decide waseme, no, we do not take any receipts that are non-ITIMS. If most of us remember, sijui kama mnakumbuka auto-population when it came, most of us, we were saying that haiwezekani, KRA cannot just wake up one day and then they decide that if it is not in ITIMS, then you cannot claim it kwa VAT. Then in November 2024, wakaamua enough is enough. From today, not on ITIMS, not deductible. And that is how it has been. So if you follow that trend, the best way is just to ensure that your suppliers wanapatia ITIMS. For those who are willing and do not know how to produce an ITIMS, tell them about reverse invoicing. Waambie juu ya reverse invoicing so that upate ITIMS yako. Because at the end of the year, you might have incurred a lot of expenses, but you are unable to claim them, which will be very bad for your business. You will end up paying taxes that you could have avoided in the first place. Also, I have talked about withholding taxes, the discrepancies. Currently, KRA is actually curbing this issue whereby it is aggregating the gross of the withholding certificates. So kama withholding certificate yako inasema ulikatwa the gross the gross income, the gross revenue ilikuwa 5 million. Wewe mwenyewe ukienda kwa returns zako ukijaribu kuweka 3 million haiwezi kubali. So those discrepancies, it has to be 5 million or above 5 million. So KRA is actually trying to curb this issue by ensuring that the income declared is not less than the withholding, because that is basically the truth. And also we have, there has been a lot of cases, especially for those of us who are either exporting or importing. We had, in the recent past, we had two cases, which I'll share so that we might understand how this came by. Number one, we had an importer mwenye kwa the import records inaonyesha aliimport goods worth 4 million in a certain year. So kwa customs clearance inaonyesha aliclear goods zenye ilikuwa worth 4 million. But kwa return zake alifile nil. So of course KRA became curious. Una import goods worth 4 million and then at the end of the year hakuna returns zimetoka. Hii 4 million, number one, hii 4 million hauna biashara, ulitoa hii 4 million. Number two, these goods, they came into the country. Where did they go if you did not sell them? The second case was about someone who is an exporter. He and export goods from Kenya. So of course customs iko na hiyo, customs has to clear that. So wanasema according to your export data, inaonyesha you exported goods worth 20 million. But in your returns, umedeclare sales zako ni 5 million. So please explain to us the variance. So if you do not have a logical explanation, then you're going to pay the resultant taxes. So if there's a variance between either your imports or your exports to your domestic sales, which you have declared in your iTax, then it is a trigger. For vertible items, KRA imejaribu because imeintegrate the ICMS report na VT monthly returns, so that at least inapunguza hiyo variance. But there's some cases whereby we deal with exempt goods zenye tunazi export, so haziko kwa VAT, but sasa mwenyewe you have not declared what you have declared in your returns na customs entries zenye zimetoka nje, zenye the clearances, there's a variance. So basically that's a very big trigger. So ensure that you have that. And if kama ume export, especially for those of us who are dealing with fresh produce, if you have exported then ikafika huko kuna zimeharibika, issue a credit note which should be ITIMS compliant to avoid your variance. Yeah, and also ensure that the conversion either in USD or Kenyan shilling or whichever currency you're selling your items with, in the same one inapia kwa export documents zako, not what you think is the correct one. To avoid these variances that will give you a lot of KRA issues. Another trigger ni someone is consistently filing new returns, but as you have said, kuna third party sources, kuna NTSA, kuna stamp duty kwa Ministry of Lands, kuna Kenya Power. Inaonyesha you are actually active, but sasa in your returns you're filing new returns. So basically that is also another major trigger, and it will cost you a lot. It will, to avoid a lot of that headache. Ensure that you try as much as possible to be compliant. Wachana na nil filing consistently, wachana na late filing, wachana na filing without actually paying the taxes that are as a result. Ensure that you reconcile your accounts if you're an exporter. Even in the statutory deductions, if they are supposed to match, because these agencies being all government agencies, KRA is actually really pushing for the unified payroll system, whereby it has to, the pay, the SHA and the SSF has to vary, has to be consistent in all the fronts. So to avoid such kind of issues, ensure that there is consistency. Number one, the figures that unaweka kwa pay ndio the same figures unaweka kwa SHA na the same figures unaweka kwa NSSF. I hope we are making sense. I hope we are making sense. These are some of the triggers that will help you avoid unnecessary career attention. I know some of us love attention, but trust me, you not want to get the attention of KRA. And then we have, this is the most common one. Did you know that KRA has a department that specifically deals with doing a lifestyle audits? So kwa social media, you are exposing a very luxurious lifestyle, but the same is not being reflected kwa returns zako. So you are showcasing a very luxurious lifestyle in public. You are describing high earnings on social media platforms, while returns zako, it's either there are no returns ama umeka bare minimum. We know that ukiweka 28,000 hautalipa tax because ya kuna relief. But sasa what is being exposed kwa social media, it is you are a person of means. So this goes especially to influencers na entrepreneur posts. You have a very active social media account. Unauza vitu sana, unauza vitu. But ikikuja kwa returns zako, nothing. Because what KRA will simply do, they will flag you and then they will alert your account manager. Account manager ndio atakufuata vizuri. So kwa returns zako inaonyesha kwa social media umenunua GLE, but returns zako there is nothing to show of that. And worse off, waka access NTSA records, you actually bought that land, you actually bought that vehicle, but returns zako, nothing. So this is just, it will become an automatic trigger. So as far as triggers are concerned, if your sales says this is a very struggling business, but your lifestyle says Dubai every weekend, someone may actually have questions like, okay, how are you affording this? That is definitely given. Like, how are you affording this lifestyle? So as in our normal course of businesses, these triggers that we have talked about, these are triggers that will invite KRA even before you give them your first documentation. Ndio, sometimes after request documentation yetu tunawapatia might trigger an even deeper audit. But the triggers that we have talked about, these are triggers whereby you're inviting KRA even without KRA bothering about you. Umewapatia a very open invitation to come and audit your accounts. So let us ensure in our normal course of business that these triggers tunazi avoid as much as in our course of business, reviews are eminent, but let it not come from you. Wacha isikuwe ndio umeambia KRA kuja kuangalia. Wacha ikuwe it happened because it is an industrial audit ama ni refund ama just a normal review, but not because of you. I hope we are following. I like to look at probably 1 or 2 questions before we look at the audit process. As Sophie is saying that she needs someone to help with your returns, please reach out to us. Just a year from your consultation. We'll have this conversation. We'll have this conversation later. We are more than able to help, more than willing to help you. So the question is, someone is asking, what happens when I am buying items? When I'm buying items without VAT and selling them with VAT, does that trigger an audit with KRA? If you're buying with VAT, and if you're buying without VAT and you're selling with VAT, the big question is, are you paying the VAT? If you're not paying the VAT, then that is an issue. If you are paying the VAT, then that is a non-issue. But the question is, why would you expose yourself to such kind of liability of VAT? I will tell you this and I'll tell you this for free. Before you buy something cheaper, ensure that the cost, both your VAT and income tax, has been factored. I'll give you an example. If someone is selling, if someone is supplying cement for you for 700 shillings without VAT, and another person is supplying the same cement with 750 with VAT, we kama unauza 770 ama 800, whichever the case, unaweza ona ukinunua na 700 uze 800, that's a lot of profit. But this 100 shillings, if it cannot cater for 16% of 800 and 30% of 800, then it is not worth it. Because number one, umeuza 800, hauna input, so you're going to pay 16% ya hiyo. Number two, where we are going, purchases will not be allowed without either VAT or redeems. So uko na 800, hauna purchase yake, so wana assume ulipewa bure ukuza 800, so profit will make 800, so ata charge 30% ya 800. So if the amount that you're paying does not cater for both 16% and 30%, then it is not worth it. You rather buy the 750 and sell it for 800, whereby you'll be able to claim both for VAT and income tax, compared to ununue 700 and you cannot claim in both circumstances. Edwin, I hope I'm clear. I hope I'm clear, Edwin. Okay, let me look another question. Let me see if I can. I can answer another question. Someone is asking something about agricultural products and VAT. Also, can you briefly advise on tax treatment of agricultural produce, particularly from a VAT and income tax perspective? Most of these agricultural items ziko exempt. Most, if not all, are exempt unless they have been processed. Zikiwa processed ndio zinakuwa vatable. But in most circumstances, according to the first schedule of the VAT Act, utapata hizi mingi ziko exempt. So you do not pay any VAT on them. At the same time, it's also important to note that if the output is exempt, then the input cannot be claimed. I hope I'm clear. Kama haulipi any VAT on the output, hata kama input ulimka VAT, then you cannot claim it in your returns. And if it is shared, kama uko na agricultural produce, na uko na you offer another service that is vatable, and you have got common expenses such as rent na electricity, you have to apportion between the exempt income and the vatable income. You'll only claim income that is related to the vatable input that is related to the vatable output. I hope I'm clear on that. Let me look at another question before we look at the audit process. A business has been running for 3 years and have not registered for payee. Which is the best time to register? The best time to register is right now. Register right now and start paying. When it comes to payee, the registration process is not as complicated as the VAT process. So what you're going to explain to KRA probably will tell them that we have been dealing with casuals, but the business is expanding, we're part of permanent. So answer easy and ensure that you start being compliant as soon as possible. Okay, so let us look at the stages of audit. The stages, I'd like us to briefly look at the stages of a tax audit. The first one is an audit notification letter, whereby KRA watakuandikia, we intend to audit your accounts. Then they'll give you a duration, let's say from 2022 to 2025. Kama watakwambia ni 2025 records, whichever period, but it will be specified on the letter. And then number two, they last for preliminary meeting whereby number one, the scope of the audit is going to be talked about, and then there'll be an understanding of the business, and then kutakuwa na timelines za submission of documents, and then kutakuwa na timeline ya the working meetings that you're going to have with them. Basically, KRA will want to know more about your business. They'll explain to you the scope of the tax audit. They're going to explain to you the kind of taxes that they're going to look at. They're going to explain about the documentation that they're going to require to do that. And now it will come to you. You have to submit the documents. So submission of documents is the next stage, whereby watakwambia 7 days, 14 days. Ukiona time ya umepatiwa ni kidogo, you can ask for additional time. Yes, as they are going to accept. Wambie nipatie an extra week to gather the documents, they will not have issue. And then after you have submitted your documents, kutakuwa na KRA review. After review, there shall be queries, whereby they'll ask you or give an explanation about your data, tupatie data list. Give an explanation about how you are purchasing your items, whether in cash, unalipa na check, and tuoneshe your documentation. Basically, anything that will arise from the document that you've submitted, there will be a lot of queries, and you are allowed to respond. Una respond according to the questions that have been asked. So they'll give you preliminary findings, you respond to them, and then it is more of, okay, I won't say a back and forth, or it is an open line communication whereby KRA will ask you questions and queries, and you have to explain for them. They'll give you their variances, you'll have to reconcile. And finally, when all is said and done, they shall watakupatia the findings for the audit. Still after your findings, you can still be able to provide extra documentation, na pia you reconcile according to the record that you have, or according to what you think is supposed to be the case. And after all the reconciliations have been done, then watakupatia an assessment notice, whereby also an additional assessment, if any, is going to be added into your ledger. So when it comes to an audit, what are some of the accounting books that are required? Even in the letter, watakuambia upatiane sales ledger, watakuambia upatiane purchase ledger, watakuambia ulete sales and purchase invoices, watakuambia ulete the GL, or rather the general ledger, and then they'll ask for an asset register, M-Pesa statement, bank statement, debtors and creditors account, salaries and wages, rather the payroll, wataulizia directors accounts. If there are any loans in audited books, watakuambia uzilete, and also watakuambia ulete stock. As you can see, if audits are not properly handled, all these documentations can be very tedious to find. And failure to produce these documents, KRA will give an assessment according to the knowledge and according to the data that they have. And in all cases, the assessment is usually way higher than if you provided these documents. So it is very important when going through an audit. I'll give you the do's and don'ts, but it's very important to have a good tax auditor. It's very important to have a good tax expert who is going to actually control the kind of documentation being sent to KRA. In the sense that you don't have to provide the documents of the year. You ensure that the documents that are being sent to KRA do not implicate you further. So it is very important to ensure that your data is actually looked at, your accounts are reconciled before being sent to KRA. Because once they have been sent to KRA, it is almost impossible to ask for them again, or rather send a different set of documents. So it is very important that you consult a good tax expert, and to ensure that, number one, your reconciliations have been done well, and number two, the documents that are being sent to KRA actually do not implicate your business further, or rather they'll just try and help your business to navigate the tax audit. So what are the do's and don'ts during a tax audit? I'll start with the do's. Number one, maintain accurate documentation and track all communications with KRA. It is usually advisable that all your communication should be via email. Surely advisable that all your documentation should be a soft copy. It is usually advisable that you maintain the same thread for communication with KRA on that case. Ensure that the people who are being copied, ensure that the very first initial thread of communication with KRA is maintained. Number two, respond promptly, always. Always reply to KRA queries and requests within the given timeline. Most of us wakiona email kutoka kwa KRA wanaifunga haraka. They don't want even to look at it again. Number two, unaona like you can decide not to send documents, which is very suicidal. So the KRA staff, they are still human beings. Number one, always reply to their queries. Wakiuliza swali, of course, with the consultation of your tax expert, with your tax auditor, reply to all their queries. If kama utahitaji an additional timeline, either to gather documents or to come up with your defense, request for extension of time. Watakwambia 7 days, and then ukiona 7 days goes naisha na you're not ready, ask for a period. Of course, it will be negotiated, but they are not going to deny you the right to additional time. And then another one, seek professional help. Engage a tax consultant. Most of us, tukipatwa na an audit query, KRA will ask you to come to the office. Wewe mwenyewe utaenda mwenyewe without even consulting anyone. Utaenda, and then they'll ask you questions. Of course, they will be very kind. They will be very open. They will be very friendly. But remember, that's an interview. Remember that the data that you're using, remember what you said might and will be used against you. So ensure that even in the very first meeting, go with your tax consultant, engage a tax consultant, and let your tax consultant handle your tax matters. Because in most cases, when it comes to their finding, there is a phrase that they usually like using. As per our interview on such a certain date, you said that this and this and this. So they'll ask you to verify, they'll ask you to give evidence, they will ask you, no, because you said this, and this is the implication of what you said. And in most cases, it's usually a tax implication. So ensure that you engage a tax consultant from the very start. In most cases, we find cases when taxpayers wanaleta kesi saini washapatiwa preliminary findings. Taxpayers wanaleta kesi when washafanyiwa additional assessment. I'll tell you this, the more advanced your case goes, the more costly it becomes for you. So the earlier you engage a tax consultant in your matters, the earlier you can be able to solve KRA issues amicably. Also, it is very important to create a good rapport with the person handling your case. As you have said, they're still humans at the end of the day. At the same time, there's some explanation. You are the person who understands best your business, not them. So if you have a good rapport with them, even the explanation that you'll be giving them, most of the time they're subjective. It can either be accepted or not accepted. So if you have a good rapport with them, it is easier for both of you to come up with a consensus on issues, especially issues that cannot be explicit, be supported explicitly. So let us ensure that we create a good rapport with them. Also, resolve as many issues as possible. If it is just the same audit process, ensure that you resolve all the taxes in the same audit to avoid the same period now being queried in a later date. So resolve those issues as many as you can during the same audit process. And then this is very important. Ensure you receive an official letter of findings from KRA. If you do not receive that official letter of findings, then basically your case is not done. This will be the letter that will help you when someone else tries to either review or audit the same period. This is the letter that's going to help you, because in the same letter itasema the taxpayer was audited from 2021 to 2025. He was audited on VAT, and these are the findings. He was audited on payee, and these are the findings. He was audited on the withholding taxes, and these are the findings. So any other person who will come, and we are protected by law, any other person who would want to audit this, query the same period, this is the letter that's going to help you. And also what is important is pay any taxes that are not in dispute. If you partially agree with the assessment, any taxes that you are not disputed to, with, ensure that you pay them or enter into a payment plan for the same. What are the don'ts? Number one, don't ignore KRA notices. Ignoring KRA notices does not, the case does not mysteriously disappear. Ignoring KRA notices does not mean that the case haitaendelea. The case will continue with or without you. Number two, don't delay submitting records. If you know there's going to be a delay in the submission of records, ask for additional time. Because when you're given 7 days, and after 7 days you're not given the records that have been required, or rather have been asked for, KRA has got authority to actually audit your books according to the records that are available. And when those records that you were supposed to submit are supposed to help you in the audit to minimize the tax liability. So ensure that you submit them on time. And if you see that there's going to be a delay, ask for additional time. I hope that is clear. And then again, don't submit incomplete records. Wanakuambia ulete payrolls, then unaleta payroll ya January to October, then unacha ingine. Ama you're being audited from 21 to 25, unaleta za 21, unaleta za 25, ya 23 ujituma. Don't do that, because KRA is going to base on what they have. And in most cases, documentations are our best defense. So if you do not send your defense, then it leaves you vulnerable to very high assessments. And then again, which is very important, do not volunteer necessary information. It actually just goes ahead to implicate you further. Always ensure that you only answer what KRA has asked. Only reply to only the query that KRA has asked for. Only provide the records that have been asked for by KRA. Nothing more, nothing less. That extra documentation that has not been asked for might be a reason as to why even the audit queries becomes more expansive. That unnecessary statement that you say without your tax consultant, that will be the statement that is going to implicate you as far as this audit is concerned. And then again, yeah, we all know that you know your rights, but don't argue aggressively. There's usually this notion that the most evil people in the KRA, like they're just after your money, they're after closing your business. But at the same time, I like to remind all of us that they are still human beings. And in most cases, even in personal individuals, how you handle a person depends on how the person handles you. If a person becomes aggressive to you, then in most cases, you'll find yourself either shutting them off or being aggressive, depending on the kind of person you are. So do not be aggressive. At the end of the day, whatever they are doing, they are protected by law. Whatever they are asking for, whatever questions they are doing, whatever assessments they are making, they are protected by law. Being aggressive does not help. It actually complicates the matter further. Yeah, we understand you are high-tempered. We understand that your initial assessment umepatiwa ya 100 million. Wewe kwa maisha yako hata ujue 100 million inakaa, hata 1 million na hujaishika kwa mkono, but wanasema inafaa ulipe 10 million. We understand your aggression, but being aggressive with KRA does not help your audit, because it's not like they're going to be intimidated or not, or something. They're just going to do the assessment and na wakwache ung'ang'ane na law. Kidogo kidogo utapata bank zao zimefungwa, bank account zako wamepatia na agency notice, and there's nothing that you can do. Even doesn't matter how many people you know, how high tempered you are, hata kama unajuana na CS Treasury. Later on, I'll be talking about a case about forgiving of taxes. Okay, not of sins, of taxes. Who has got the power? Stay tuned, and then you'll know why it is not good to be aggressive with KRA. What is the role of your tax advisor? What is the role of your tax advisor? Tumesema ukiwa na audit, tax audit, involve a tax advisor, involve a tax auditor, involve a tax consultant. So what would you expect from a tax advisor? Number one, preparation of the audit, pre-audit preparation, whereby hizo documents zenye KRA wamekuitisha, he's the person that is going to handle all of them. He's the person who is going to handle all of them. Na before atume any documentation, inafaa kuwa amezipitia, amereconcile. I hope I'm clear. I hope I am clear. Ensure the bank statements before you send them, inafaa as a review, afanye analysis, akwambie the kind of exposure that you are in currently, the ledgers, the trial balances, the invoices. He has to look at all of them before afanye preparation before anything is sent to KRA. And then number two, he's the same person who is supposed to handle communication with KRA. Tumesema you as a taxpayer, you're not supposed to answer what you've not been asked. You're not supposed to share what has not been requested. And tumesema you can ask for time. So all this is the role of the advisor. Wacha handle all communication. Wacha is the person who will be arranging the working meetings. Wacha endo anatuma documentation baada ya kuzireview vizuri. And also compile easy documentation. Let him do that. And also when it comes to KRA, you might know more about your business, but your tax advisor knows more about taxes and the implication of taxes to your business. So leave your tax advisor to do your representation. Yeah, I know when you are young, you aspire to be a lawyer, but if you're going through a tax audit, let your tax advisor do the representation and your defense. Also, ukipatiwa the findings, your tax advisor should be the one who is going to review the findings and the assessments. And any response to that is supposed to be the one to do that. Any reconciliation is supposed also to do that. And also, as the audit is ongoing, he is responsible of educating and supporting compliance and future planning. Inafaa kuwa na educate about what your business is not doing right, and also support on compliance, and also future planning to avoid future audits, pitfalls to avoid when it comes to any audits in the future. And also when it comes to penalties, ukipatiwa assessment, also the role of your tax advisor is to negotiate, because it is not usually cast on stone. It is mostly a negotiation, whereby that is why we even have the ADR in the tax appeal tribunal. Mnakaa chini, he negotiates on the assessment and also the penalties. About have accrued and also the assessment. He's supposed to do that, not agree with everything that KRA has said, because his role is to give you the best deal possible. So for those of us who are tax consultants, the last part what the changes, Anna, but it is one of our roles as tax consultants and tax advisors. So basically, this is how a notice of audit huwa inakaa. So inasema notice of intention to verify income tax records. So inapatiana, it is usually under section 59 of the TPA. Then itapatiana mwaka, itapatiana what has to be there, itapatiana the documents that are required to do that verification. In case kuna hizo, you remember tukisema hizo triggers, kama you remember the variances. Let's say the variance between the pay, itasema pay ulilipa 3 million, but kwa income tax uli claim 4 million, please provide a reconciliation. Itasema VAT declare this amount, income tax declare this amount. Hizo ni za item. Kuna itakwambia tu we are going to conduct an audit of your returns for 2021, 2024. That is basically a desk audit. Ama watakwambia it's a field audit. So the more you grow as a business, the more you expand as a business, you cannot avoid KRA all your life. So it is a matter of when, not if, when they come. So the question is, in that preparation, what are the best? Because tumesema, if you're going through a tax audit, we have looked at the do's and don'ts. If you're not yet there, we are saying it's a matter of when, not if. So what are these best practices as we almost wind up? What are some of these best practices during prior to a tax audit? The best one is implement proper tax planning. The person who can help you plan your taxes is your tax advisor. It is high time businesses realize that compliance is not a cost, rather it's an investment. The way you invest on increasing your purchases, the more you invest on increasing profitability, will be the same, but should be the same bandwidth that you invest in proper tax planning. Number 2, maintain organized and accurate records. They should be organized and they should be accurate. This is your best defense when going through an audit. And then again, you should file quality self-assessment returns. It's not about filing by VAT by the 20th, ama pay by the 9th, ama income tax for individuals by 30th of June. It is filing quality returns to reflect the actual performance of the business. And then again, conduct regular tax health checks. Health checks help you know how healthy your business is. Just like you can decide that every year I shall be going for a health check to just have a look at my body, how healthy it is. The same should apply to your business. Ensure that you actually seek the services of a consultant to help your business undergo a health check. This is actually one of our best performing services. And I'll advise for those of us who are in this webinar, reach out to us. We'll help you seeing the kind of exposure your business is in, and also tell you advise you on the best way forward. And also consult your tax advisor proactively. I think you should differentiate between a tax advisor and someone who files your returns. Also differentiate between your auditor and your tax auditor, accounts auditor and your tax consultant. These are two different fields. These are two different fields, and you're supposed to have an in-depth knowledge about the difference between the two. So what is the solution for your business? Number one, have a reconciliation between your POS and your ATMs. Because in most cases, when it comes, especially to field audits, KRA will even do a system audit, whereby watachukua your POS yako, they will run it, and then they'll compare to what you've been declaring in your ATMs. If there is a variance, then that is an issue. And also, when doing purchases, fanya ATMs verification. Unaona hiyo QR code yenye iko kwa invoice yako. After making a purchase, scan that QR code. Ensure that the details in the invoice are the same details imekuwa submitted. Ensure iko na pin yako, ensure iko na jina yako, ensure that the amounts are correct. I can't reiterate more the fact that we are in Kenya, and sometimes businesses would want to be smarter. Kuna watu wanachonga hizi ATMs invoices. So wanakupatia, it looks legit but it's not in KRA. So cross-check it, verify it, and also do a monthly multi-tax reconciliation. Angalia pay, angalia SHA, angalia VAT. VAT compare it with your Z report. VAT compare it with your POS. Angalia the salaries that have been declared under pay and under NSSF and under NSSF. Kama zina match. And also, there are some revenues. They're not. Pesa imeingia kwa account yako, but sio revenue. Either ni director ameweka capital injection, ama umechukua loan, ama it is an untaxable deposit, ama ni investment which is umekatwa withholding which is final, ama umeuza asset. So unaona hiyo pesa ikiingia kwa account, if you do not do a reconciliation, KRA will, when doing a review, will watachukua pesa yote waseme hiyo ni, those are your sales. So ensure that you actually do a reconciliation between your revenues and also non-revenue bank deposits. So what do you do when KRA visits? KRA visit site wakuja kwa biashara yako, what are you supposed to do? Number one, do not panic. Do not panic or issue immediate oral explanations. We sikiza swali zao, kila kitu wanauliza, andika chini, waambie utawarespondia. The best thing kama watakupata bila consultant wako, wewe andika chini, waambie utawarespondia everything that they have asked for. Number two, assign one designated tax professional to handle all KRA communications. Now the issue is, you have engaged this tax professional, amekuadvise this thing, ashaanza kurespond na KRA. Kidogo you meet your friend who tells you that kuna mtu alimhandlia tax issues vizuri, so tena unamengage mwingine. There has to be unity in communication. Ensure it is only one designated tax professional. And in most cases, you'll find that even in a lot of tax forms, a single person is given a single tax case, in the sense that it's only one person who will be dealing with KRA as far as your case is concerned, which avoids a lot of confusion. And also number three, reconcile the requested periods internally before submitting his returns, before submitting his files, before submitting the documents that have been requested. Reconcile internally and provide explanation for variances. And do not provide explanation for variances if you have not been asked. Hata mwenyewe kama unajua umerealize kuna variances, tumesema do not give information that is not asked for. Ongoja KRA waseme kuna variance, ndio mwenyewe explain hiyo variance. Usi explain variance before hata KRA waseme kuna variance. Also, number 4, provide exclusive what is requested in writing. Never submit unrequested financial year. Wamekwambia 21 to 23, wewe mwenyewe umeleta from 2020 to 26. Hakuna umekuuliza zingine. Only provide what has been requested. I hope we are making sense. I hope it is clear. I hope it is clear. So, how do you survive? That is my final part. How do you survive? Number 1, the first trap, una rely on manual receipts. Hauna items. I have talked about that. Number 2, you're mingling your personal and business cash. The same bank account ndio unaweka pesa yako ya biashara, unaweka pesa ya mganda, unaweka pesa ya harambee, unaweka pesa ya hospitali. It will, when KRA comes to review your accounts, then it is utashindwa kuexplain hiyo pesa yenye ilitoka, because pesa ya project ya kanisa inafanya ni kwa personal account yako. How do you explain that to KRA? And KRA is not theory, KRA ni documentation, proof. Number 2, then we have got ignoring notices. Unapatiwa 14 days, unaachana nayo. Hata una delete your message. Some of us have blacklisted KRA numbers. Ukiona tu ni namba ya KRA na kupigia, unaikata ama unaachana nayo inalia. It's not wise. Skiza, mimi huwa naambia, this is what I tell people. Si ati KRA watakuchapa ukishika call yao. Shika call, wasikizie. If you've got no answer, unasema ni sawa, I'll talk to my tax consultant and I'll respond. Sometimes tu wanataka kukuambia, kuna deni uko kwa system, hebu ilipe kabla hujafungiwa bank account, lakini hutaki kushika simu. Unaamka siku moja bank account zako zimefungwa. And then we go spread a message on how evil KRA are. I am not for KRA, but I am here to educate people. Settling statutory deduction selectively. Mara unalipa pay, mara unalipa shift, housing levy, sometimes ulipi. NITA unachana nayo. It is a very big trouble. So what do? Automate systems. Where we are going, ni lazima kuwe na an automated system. And after this, just briefly after I finish, I'll give you one of our persons mwenye atatusaidia ku run through. We have a system that actually helps you keep your records, help you separate your business and your cash, your business and your personal cash. He'll talk about it. And also another way you can comply, accuracy protects your cash flow. So the thing is, fixing simple filings and items variances before submissions usually stops sudden penalties and bank accounts that have been frozen. We have said you reconcile. We have said that you automate. We have said that your audit defense starts today. Way before you receive that letter, your audit begins today. And then again, stay compliant and stay growing. Clean tax records protect your business, save time and secure long-term stability from 2026 onwards. So as I finish, I'll tell you this. In taxation, inconsistency is like perfume. Yes, it is invisible in most cases, but eventually everyone notices. Sijaona mtu amejispray na hataki watu wakose kusikia harufu ya spray. So that is inconsistency. in taxation. I will look at a few questions, 1 or 2 questions before I give our system person. But I like to tell you guys that we're having a masterclass, a physical masterclass from the 9th to the 11th. Kama uko na issue na KRA, kama uko na issue na file returns, kama uko na issue in understanding all kind of taxes, come to this class. We have both the physical and the online training. We will help you navigate like practical examples on how to navigate these audits, practical examples on how to plan, practical examples on how to save on taxes, practical examples on how to actually file those returns. And we shall go through all the tax laws that are in Kenya. Tutaangalia income tax, tutaangalia VAT, tutaangalia stamp duty, the TAT Act. We shall look at the TPA. So if you're interested in compliance, if you're interested in taxes, this is not a class that you can miss. Ensure that you come. The physical is 50,000 that will run from the 9th to the 11th. And then we have the online training, which is 10 days that run from the 14th to the 25th from 7 p.m. to 9 p.m. The physical one in a run from 8 a.m. in the morning hadi 5 p.m. Sometimes we'll find natoka hadi 6, which is usually very, very interactive. So if you're interested in expanding your tax knowledge, if you are interested in expanding your business and increasing compliance, business owners, send your accountants. Tax practitioners, come and let us engage. Even the enthusiasts and those who are entrepreneurs, we shall be offering a certificate for those of us who are registered with ISPAC. Utapata CPD hours zako and utapatiwa certificate at the end of the day. And in the same breath, we shall have an audit and bookkeeping masterclass in November. The first one is in September. This is next month. And then the audit one is in November. The physical, we will still have both the physical and the online training. We have talked about proper books. We have talked about proper returns. We have talked about proper documentation. The how, come and join us in the audit masterclass. So what do? We offer a lot of services. We do all kind of returns. So we do health checks to see how ready your taxes, your business is ready for compliant with taxes. We help refunds. We help process tax refunds. We do representation to KRA with different issues. We also help businesses navigate the audit process. Here we offer advisory services when it comes to mergers, when it comes to transfer pricing, when it comes to ESOP, when it comes to all advisory services, even due diligence and internal tax audits. So contact us today, and let us continue with this conversation. And I hope all our questions have been readily answered. And I will still insist, please leave your details if you want a recording, if you want resources for this webinar. Ensure that you register in the Google form provided. And we will continue with this conversation there. As I said earlier, we have a system. We have a system that is called My Accurate Books. The system was developed we have been in this field for long enough to know what gaps are there when it comes to systems, which gaps are there when it comes to actually payrolls and keeping data and petty cash. So in the next 10 minutes or so, I'll invite my colleague to come and talk and give us a sneak preview about about my accurate books and my accurate pay, so that when you want to say my ignorance is no defense. And now that you've been told, now that you've been taught about audits, now that you've been told about the pitfalls that triggers these audits, how about we learn a thing or two about prevention of the same? Besides that, it's been a pleasure being with you in this webinar, and I really hope we'll meet in the tax masterclass. It is one thing that you will not regret attending. So thank you so much, and welcome Timothy. Karibu.
Good afternoon, team. Thank you everyone for joining. Also, thank you, Timothy, for that very detailed presentation. So I'm Timothy Kibe, part of RWK Africa, and I'll be taking you through the next 10 minutes so that we understand the software that we have and how it can assist your business. So first of all, I want to thank each and every one of us for joining this session. So we have these sessions on Fridays, so feel free to join, and I'll also be checking the recorded videos on YouTube. So we have learned a lot now in this task section. And internally in RWK, we have an ecosystem of accounting, payroll, and wallet. And I'll explain this one just before we dive into a quick demo. So my accurate books, this is a very simplified accounting software. And we'll see that in a few. And around it, we have more than 2,000 active customers and businesses already using this. It's meant for accountants and anyone in a business. So it's a very simplified version of accounting. Just on top of it, we have My Accurate Pay. We've had Timothy emphasize about mixing business funds and personal funds and finances. So with My Accurate Pay, this is a wallet supported by Chase Bank with our partnership. So this wallet will assist your business or organization in managing or separating the business funds from personal funds. And on top of it, as we'll see in a few, you are able to actually have authorization so that maybe the director has traveled out of the country or somebody is not available. You can have limits within the company on expenditure instead of just using a petty cash. And on top of it, we have now the payroll system or the payroll module. So this one handles everything HR and also payroll runs, including automatic disbursements and multi-user authentication or approvals before a payroll runs. And all the calculations and history is kept within the system. We'll see this in a few. Also, please feel free to put any question in the chat so that we'll go through them after this short demo. So this will be a quick overall of our product. If we wish to have a detailed demo, we offer free demo, personalized demo per business in case one of our system or a software will improve your procedure manuals or your processes within your company. So in the earlier illustration, we have seen My Accurate Books, which is an accounting software. We can just have a sneak peek of how it works. So I have a demo account ready. We'll just go through it together, see some of the features that we have here. So under dashboard, you're able to see how your business is performing, all your sales, expenses, and purchases. And maybe just before I proceed, I left out how our systems interact with each other. Let's say, for example, on the wallet, you have some expenses. You have paid directly to an M-Pesa, or you have sent a specific business money. So our systems are integrated such a way that that will be recorded within the accounting part without doing that manually. And let's say, for example, it's every company, our goal, especially this last week of a month, we want to pay all our employees on time. So when that time comes and you run up and approve a payroll, those records are automatically, the journals are automatically posted to our accounting software, or with special requests, we can actually integrate with any of existing business accounting software. So when you have this integration on your finance, you're able to see all your sales, purchases, profit and loss statements. Under inventory, you can quickly add your goods and services. Remember, this works for both retail and services. For sales as well, you're able to do, you can easily make a sale. And remember, we have KRA integration, eTeams integration, so that you can send an invoice and also send a receipt with KRA. The KRA is the ETR code. And also you can send that one without. So it's a very flexible procedure. For those offering services, you can easily send a quotation. Remember, we are just doing a quick overview. We have, if you, my co-host can share a link on the chat so that in case you require a specialized demo, full demo for our system, you can book a demo with us. Matters like credit notes, receivables, any expense we have, always the software will be able to record that on your business. So on top of MyCredit Books, I mentioned we have the MyCredit Pay. So this wallet will manage petty cash on behalf of your business. So on Play Store, you can have users download the app or access it online by logging in. And remember, this is a wallet that runs inside a bank, Choice Bank Microfinance, through our integration. So it's very secure and it's used by so many businesses, and so many of our customers are very satisfied about it. So I will quickly go to payroll, which I want to put an emphasis for today. We have a small demo account. So let me just log in really quick. Yes, remember, as we wait for the OTP, we'll take any question that is there on the chat. And thank you everyone for those who are still in the demo. Yes, it's eTeams. We have integrated it with eTeams. So all your invoices and receipts becomes compliant. Yes, so I think we have the OTP. All right, so let me just quickly log into the payroll system. I remember in the beginning of the demo, under our ecosystem, due to our customers' request, this was added on top of the MyCredit Book accounting software. So anything compliance when it comes to making payments and getting remittance, what you need to pay now to all statutories will be managed here. And also just a quick overview. Here, just like MyCredit Books, you're able to see how many your monthly payroll run, how many people are in your organization, statutories. Employees can easily onboard the employees here with a template, do bulk appraisals, also add consultants. You know, difference between the employee and consultants. Consultants, you have to do the withholding pipe, so the system will automatically calculate for you, and also offboarding. So for payroll runs, it's very simple. automatic salary advances. Its employees will have a self-service application and portal. So before running a payroll, just make sure salary advances are in order and approved. All commissions, in case your business has commissions or performance bonuses, are added or have been already been added here. Any manual deduction, let's say in your somebody didn't pay a bill, or there was some deduction, or something was stolen or destroyed, and you need to do a deduction, you can always add it. Custom deductions include things that are recurring, such as the welfare for employees. Let's say your organization do 1,000 or 2,000 per employee per month, so that it can cover when we need to assist any one of us, or we have some chama or anything that has recurring. Remember, these are just additional deductions. So you just come and make sure everything is on order. So I'll just do, since this is a demo account, we just do a quick, you can just do a quick payroll runs. Yes, I remember I have a payroll that it's due to be approved. So remember, this will have a free demo. We have a free demo. So any company or organization that you want to a detailed demo, we will take you through this. And for disbursements, we have integrations with the wallet, so that and also PesaLink, so that once a payroll is approved by multiple companies or multiple directors, the funds will be disbursed automatically, and those records and journals will be posted automatically. Something interesting on every payroll run, when it comes to statutories, you can just quickly pick a specific month and download all the statutories. This includes all the documents they want for filing in pay, NSSF, the SHA, housing levy, HELB, in the required formats. So you have the system will manage that, and you don't have to do it manually to avoid any errors. And remember, all this, including salary payments and also the remittance to NSSF and other statutories, the journals will be maintained and kept in the system, and you can also integrate it with your bookkeeping software. And if you use our My Accurate book, our internal accounting software, every payroll run, those journals will be automatically in sync. Okay, so that's all about that. So on top of just the payroll functionalities, we have attendance, which is contactless, meaning we will have a QR code based attendance that is logged to that or to your business location, so that it can't be scanned outside that business premises. Leave and attendance is also available, where from employee self-service app, they can apply for leave, and you can easily see the balances. And in case your organization salaries is attendance based, the system automatically supports that. So currently, for compliance, every payroll runs, you'll be able to get reminders for due dates. Let's say for remitting, paying, the SHA, NSSF, housing levy, so on and so forth, so that this currently can be manually marked as done. But we are hoping in the near future, the government system enables third-party systems to automate this process. So that is all about our ecosystem of the software that we provide. And what makes us stand out against our competition is that how flexible we are, not rigid. We are open to making custom changes, and also we are very affordable. So for pricing and also booking free demo for any of our products, please check on the chat. You can be able to book a session. And thank you so much, Tim. Thank you. I'll just go through the questions in the chat. Sophie, thank you so much. Thank you so much. Thank you so much, Sophie. A co-host will be sharing a link. So we have a link right here, just in the chat. Please fill it and welcome for a demo. Thank you. Thank you, Janine. How do we get P9 forms for year 2026? Okay, so with our for the payroll system, all the employees have a self-service application and a web portal. So you'll be able to download, every employee can download, and also the P10 form. Okay, I'll welcome now further comments as we wind up. And also thank you once again for always joining. The recording of the same session will be shared. Also in our YouTube channel, we also have more recordings. Thank you, Janine. So for any more inquiries, please fill the form. We'll be able to get back. And also, I believe our chat or our numbers are in the chat. So I would welcome any final